Good morning, traders, and a very happy Tuesday out there to everyone. Hope that y'all had a nice weekend there in store, and should be a very interesting day in front of us. Just before we go hopping into the charts, just to make note of, as far as our economic calendar goes for today, we do have Canada with their CPI figure out at 8:30, as well as the U.S. will have our Empire State Manufacturing Index also due out at 8:30 Eastern Time there. So we'll keep an eye, see what type of gyrations we get off of those morning figures. But once again, that's CPI for CAD and then Empire State Manufacturing for the U.S. And then outside of that, as the day progresses on, we're pretty light outside of that. So just to make note of those few morning figures there. But with that said, we can come over here and start to look at our daily charts here of the S&Ps to kick things off. And as we know, of course, yesterday being the holiday data there, so a nice tiny range, but even outside of that, we can take into account the action that we had from Friday's trading, right? So on Friday, we put in a low of 47.9150 on Friday, and we were able to test beneath that in the overnight session. Have proceeded to come back up, so tested briefly on the other side of Friday's low, and we'll want to keep that level on the sheets. 47.9150 is going to be a good point of interest. And then outside of that, the other item to consider here is the day prior to Friday. We had a pretty decent sized range on Thursday's trading. 48.38 down to 47.72.75. And what we haven't seen as of yet is a trade outside of that day's range there from Thursday. We came very close, certainly on Friday, towards trading to the upper end of the range, but kept it nice and contained, so we're still playing back and forth between the 48.38 and the 47.72.75. So as far as the daily display goes, we'll certainly want to keep those on the sheet. Outside of that, our daily EMA also rising here. However, daily EMA coming in very much in line with the low from Thursday's trading there. So even if we were to loosen up at all, we'd still be able to work with those two figures there. So as far as the daily display, that's kind of where we're standing here currently on the S&Ps, leaving a mild tail in the overnight session. Coming into our larger time frames, the 240-minute display, we can see not too much damage done. We did work off this bit of a loss of momentum or sell divergence on the 240-minute display. So we can see that we've already corrected that feeling, pulled back, and then even went for a further retest. Gave it a nice double test up there. So 48.3650, two data points that loom up above, so making it a valid point of interest. And then down below, in case we do end up slipping down and picking up some more steam, viewing the 47.6750 zone as being more of a caution zone, if you would, there for the E-minis. So corrective action on the 240-minute slow line all the way back to zero, and this is where we're landing here currently without doing too much big damage there as far as the S&Ps go. So keep an eye on those zones. Really, Thursday's range there, a breach on either side of that would likely generate some additional interest. But as we move along, we have the DAX to take into account here as well. DAX in the overnight session, a little more active, if you would. We can bump this line down just a notch, so we were able to trade on the other side of the 2 week low, if you would. So we had 16,584 there in the case of the DAX. Came down in the overnight session to 16,594, so just briefly holding above that previous tail zone. However, also a pretty high degree of price bar overlap. However, at least if comparing up against the E-minis, we can see that we were able to escape the range there from Thursday, whereas we're still trading into that zone as far as the ES goes. So DAX a little bit more range bound. The other item here in the DAX that we'll have to take into account is that we had this by divergence or hourly divergence forming overnight, and that we've already had some reversion here towards that hourly moving average. So DAX has already had some nice counter-reactive lift, and what we'll want to do there is just keep an eye, because we're already here, 16.9 or 16,696 being the hourly moving average. So already giving us some reversion to the mean, and then as we'll see, we're just coming right back into that Thursday range, kind of like what we have going on there with the ES. However, we'll leave that up there, the hourly chart of the DAX, since that does give us a pretty decent feel there to work with. And then next in the queue, we have the Euro currency here, which will want to also be out on a just notch of a higher time frame here. In this case, we'll look at the 240-minute display, and then we'll also take a quick peek at the dollar index, because we do have some interesting items starting to line up on the dailies as well. So with the Euro currency, obviously we've had a nice breakdown in the overnight session, just enough to look on the other side of the 1.09080 in the case of the 2-week low. So good extension in the euro currency. Obviously, as we know, any further down from there, where we're start to be moving into are these impulse bars that we had to the upside in the EC after having formed a balance, after having a decent swing to the downside. So as we come down there, whether looking at the dailies or the 240-minute display, you can see that the zone's fairly important for the euro currency. If we do not hold here and try to regain some footing, we could see down here on the far left-hand side, we do have some structural work that could still be done from our original impulse to the upside. So an important zone for the EC, 1.09080. If they can hold it, we can prop it right back into the range and do some rotation. But on the other hand, if they do not hold and continue to press down, we would be coming in to fill in some of this work here on that 240-minute display there for the euro currency. And then just at brief, I'll bring this one over here as well. It's a slightly different feel, and this is more so on the daily display. And this is the dollar index, right? So we've come down, we formed a cluster last week, just like the euro currency. However, what we might want to note is the posturing here of the slow line here on the daily dollar, because that's giving us the feeling of putting in the first feeling of a higher low, almost like that buy ante feeling, right? Slow line rising, pull back in the slow line to meet the fast line, and kind of coming in and trying to form themselves the first higher lows. So in the case of the dollar index, we have 102.830 there as being the 2-week high, just like how we had there in the euro currency. Of course, it's the 2-week low in their case, but either way we slice it, dollar index and euro currency sitting on some pretty good zones of interest, if you would. So that's where we stand there, and then we're going to move on along here to that of the gold. We'll get rid of our 310 now. Just wanted to give that visual there on that EC and that dollar index. And then as we come in here on the gold, the GC put in, pretty decent work there on Friday's trading, a nice impulse bar to the upside, and we've been trading inside of it. We haven't breached the low of Thursday as of yet. That would be one that we'd want to keep on the sheets, however. 2033.1, nothing, that should be just okay, 2033.1 there. And as we know, we had put in a good amount of work in the gold around that area, almost like a volume node, if you would. So as we come down, sure, we have the low there from Friday, but also as we come down to the 240-minute display here, we can see we've been keeping it, fairly behaved overnight. We were doing some holding here on the 240-minute display or the 120-minute, and all that's going to show up as is the failure to make the full retest up there on Friday's high. So we've been coming down, filling in some of the blanks. We have some decent, selling pressure so far. However, as we come down in the gold, really viewing the 2022.7 as being a bigger caution zone. But for now, this will show up nice on the market profile display as well. We can see that we're filling in all that impulse activity that we had from last week. So we'll keep an eye out for that, see how that looks on the profile display. But for now, filling in some of the blanks and picking up some better downside traction there as far as the gold goes. And on a totally different front, we have that of the crude, right? The crude's been a tad more range bound as of late, a higher degree of price bar overlap. So the crude here, still a little play around the 72.53, our original cycle low that we had to the downside in the crude. So a lot of clustering around that zone, and Viewing these as being a bit of a window here, 73.59 up to 74 is kind of being the upper end of this hourly range, and 71.44 to 71 even is being the lower end of the range. And with this type of structure, what we want to be cautious of or aware of is when we do start to come up and reach towards the upper or the lower end of the range, since as of late, the pushes outside or towards the upper or lower end have been met with fading activity. So we'll get a nice impulse up and then bring it down to the other side of the spectrum, try it out again, and that's kind of been the theme here as of late in the crude. Nice runs up, and then they bring them back down back to the core. So as we can see, between essentially 73.59 and 71.44, we've put in a lot of work here with the crude, a lot of two-way trading, so building themselves out a nice amount of volume in that zone there as well. So we'll keep nice tabs, but we have some good zones here on the hourly chart up above, 2 data points up above, as well as 2 data points down below there for the crude. And then last but not least here, before we go hopping into that CPI data there from Canada and then our Empire State Manufacturing for the U.S., is that of the bonds here. This line down here is just from our original readings there on the 2-period rate of change, so don't really need to have that marked off. And then we could start to blow it up a notch. Once again, also good to note which ones are trading on the other side of Friday's low, so we're still, like the S&Ps, trading inside of that Thursday range in the bonds, with 123.15 being the top of Thursday's bar and 121.15, a nice 2-handle range there on the bonds on that particular day. So as we come down, we'll keep a watch on that, 125.15 and 121.15 there as being our kind of points of interest, just like the S&Ps. A breach on either side of that, I'm sure, would generate some additional interest. But for now, keeping it nice and contained. Here's our view on the 120-minute chart. Right, we know we have some, impulsive areas from the far left-hand side when we were taking out 120.25. We didn't put a lot of trading in between that point and 120.120. So each time we've come down, we've just left short-lived tails. We haven't really done much development in that zone. So should we come down and breach that, just being aware that we do have some structural work down there. But for now, I can't fault them too much. They're, still trading inside of that bar there from last week, that Thursday range. So we'll keep tabs on that though. But with that said, we'll get these S&Ps loaded back up here. Let this morning Canadian piece of data come out and Empire State Manufacturing, and see what we have lining up for this nice Tuesday here in front of us. So let that all come out and hop right back on. Should there be something nice and interesting starting to line on up for us, but not looking half bad here to kick off the week. And then lastly, just to bear in mind, they're kind of slow on the uptake, but we will have the starting of earnings season going on, kicking off with the financials, so some Goldman Sachs, things of that nature, and then we get some of the bigger names to come in there next week for their earnings. So good to make note of that, and I'm just going to dial it back a little bit here in the meantime, and I'll see how we line up after getting this morning data out of the way.